bro, rates are up. Look at the 30-year.
Saw that.
No, I'm aware it's up. We're up on the day, but I'm saying is we've got our first. It was just grinding higher and higher. We have our first kind of pullback in those.
London close. What's up, fellas? London close 7 minutes. Near yield 4.182%. Gold right in there. $16 off lows. 42.20 last trade. GK long 3, correct? From 25,640. Yep. We get back in on the ES, Jack. We're still flat.
Oh, we're still flat. I mean, I could be convinced to get long. See how we react a little around this 68.50 SPX.
I like the longs as well. NASDAQ could push above 700.
Gold is pushing higher here. Last trade. NQ 25,667. The chat 9,000. Jack needs to give a class on what he watches in rates and bonds. I find instructive. He needs to be wanting more. Jack.
We're talking bond school. Maybe someday.
Yeah.
200,000 subscribers.
Ooh, there you go. There, now you have it.
There we go.
Let's get to 194,000. I like it, Jack. Let's go like the Saturday morning class.
Yes, it was.
Oh, man. Dakota, I heard you say something. You're talking about perhaps liking along?
Yeah, I like the longs for a push up towards 700 here. I'm going to watch for a pullback, maybe an opportunity to get into it.
Right.
Still fighting the IB low here.
See that? In both ES and NASDAQ?
Yep.
Okay. There's my opportunity. I'm long one from 655. Just one micro. And I'll add to it. I'll add to it as I see fit. Yeah, I'll add another one. I'm long 2 from 54.
2 from 654. And on the tilt, on the hour, also close in 4.5 minutes. Also pinned to the top of the chat. Get those questions in for group coaching. And that link. Sure, see if you can stomp them. Edie Vince Hoop. And this today. And morning recap coming up after this. Oh, and then Power Players, Diamond Hands will be joining Coach Jay and Dolby Time after morning recap. Diamond Hands. Hey, George. We're both Diamond Hands. Oh. Yeah, here. Put a long 2. GK long 3. And then Qs. How's it going? Still short. 1. Michael going from 42. 33.
Added another one, Andre.
Okay. Long 3. Look at this. Long 3, average price right around 54.
We're taking 55.
55. Here we go. This one's for you, Jack. BLS, Bureau of Labor Statistics, will be releasing November PPI. October and November PPI on January 14th, 2026.
Okay, we're getting closer.
I'm closing the gap. My goodness. Wow. See a little selling come in there in the NQ. Got a 74% long tilt in the ES right now. Average price of 68.60. Price of 68.55. GK, you got into this long. Were you going off the ES as well? Same setup or different setup, different approach on this one?
Essentially, yeah.
Okay.
Almost, yeah.
MU all over it. Nice job. Yellows. In catch up right now. In catch up with all those, what was it, inflation statistic, jobs report. We got a 3-month and 6-month bill auction coming here in about less than 2 minutes. Watching gold grind higher, about $20 off the lows as we trade 42.23.
That's what I like to see in the
Yeah.
back.
When gold's wearing you out, just get out.
I like that. Wearing you up, just get out.
It's good.
Didn't take out the lows, so yeah.
I want to get back to Dakota. Dakota, you like that? What did you see? What did you see that you liked in the NQ last trade?
I'm zooming in here on the 100 tick chart. We broke down,
Right.
held these 640s, and then just ripped right back up. On 5-minute chart, that's that nice wick, and now we're flipping green. We're flipping from red to green, and if we could break through these 70s again, yeah, I really like that play towards 25,700. If we can break through and hold these 670s.
Let's trade 662. Initial balance lower above it now. Hope a couple points.
3/4
If it tells me we
long.
could have
Yeah.
what happened.
Yeah.
If it tells me we could have what happened on Friday, the day it's in the opposite direction.
Remind us what happened on Friday, Chica.
So we pumped up, we sold up. So here we sold up. We pumped up.
No, we have his eye on that. All right, let me close 5 seconds. 5 seconds. Let's see what happens here. It's closed. So there's stuff higher now, says JG. What's up, JGZ?
Let's get it.
Let's get it indeed. All right, Ho, you got your work cut out for you. You got morning recap to prep for. We'll see that after fast markets. As always, is Hogue Pro. Hogue is a pro. Hogue, all right, let's get your prep. Couple words, as always. Happy Monday, Hogue. We go test the highs
Yeah,
today.
thanks. GK, Dakota, Jack, Andre, always a pleasure. We'll see all of you in just a few minutes for the recap. Trade well. Nice trade going here, guys. Nice trade. Looking good. Gotta hold that IB low. See how it plays. See you in a bit.
Thank you, Hogue.
Yeah.
See him in a bit indeed after morning, after fast markets. 79% long tilt in the ES now. So we trade 68.60.
We got to get over these 670s.
Let's trade 25. This is 79% long tilt.
So it says, what's my first profit? I'm looking for 700s. I have 3 contracts on, so I have the luxury of scaling out, right? But I don't like to have a take profit there, just resting, because it just like if a news line hits and it hits your stop loss, if a news line hits and it just goes straight up, I don't want to put a cap on my profits.
I'm a big fan of that.
We need to get up above these 670s.
I know what you said. I'm not taking enough on for that one. Dakota, gold continuing to grind higher. Now about in the middle of daily range as we trade at 42.25. Session high 42.45. So 78 63% long tilt in the ES NQ, 64% long tilt. We'll keep an eye on the ES. 60, 57. Let's take a look at that NQ there. We did see that 4 hard lot filled on the bid. What price was that? 5,770. Straight 25,650. And your prices have found a bit of a base. Prices have as well yields 4.18%. It's consolidating, holding pattern right now. Gold. Going to grind higher here. Some get absorbed here in the ES. 6857. Last trade. GK, what are you watching for in the ES with your long in the NQ? Do you have a price in mind, or just watching the price action? Or discretionary exit? Okay, for a discretionary exit,
Also, do you expect people to consolidate that for a bit? Or maybe we take the upside or the downside?
I love it. Nothing wrong.
If you're in the upside move.
25,648. Yeah, 647 is the last trade. 20 points off the lows in the NQ. We did see some buyers step in, about 15 cents off the lows in crude as we traded $59.19. Treasury now, no auction for, yeah. Nothing huge there. President will be signing an we'll be in a roundtable, just based on a roundtable, 1 p.m. Central Time today. Has anything to do with the we're doing a one rule executive order this week on AI. Something to do with that. If we have it here, we won't pipe that in. Keep an eye out or keep an ear out to see if anything is said regarding the equity market moving. All right, it's Monday, but Friday was an interesting trading day to say the least. Got to see how our traders, see what the P&Ls were, see what some payouts were. Bring in JD, and JD hit us with a recap from Friday. Wait, what? Who got paid what? What's up, JD?
What's up, guys? Yeah, we had some impressive numbers coming from our live funded traders on Friday. Check out these P&Ls. These are Friday's top 5 live funded P&Ls. Up at the top there, Poe put together a $29,000 winning day, mixing it up between the NASDAQ and the micro NASDAQ. Huge day for Poe. Korab, more than $20,000 in profits trading the NASDAQ. Jose, $20,000 trading the NQ and the MNQ. Tyler, just over $14,000 trading gold, NASDAQ, and the micro Bitcoin, mixing it up there. And our old friend Jessica M is back, $12,584 in profits trading gold and the
Jessica
NASDAQ.
M is back.
Big shout out to these live funded traders. Having a great day going into the weekend. Speaking about great days going into the weekend, these traders had a nice weekend. Take a look at some of these payout numbers. Alexander C up at the top, $40,545. That is a great way to start a weekend right there. I hope Alexander is going to
That was the real
take a little time. And
Oh, that's the
nice
funded
little
one,
nice.
the Express.
Catherine R, $36,000.
He made $40,000.
$37,000 in payouts. Natalia, $10,780. Mujibraham, $5,978, called $6,000. And Axel, $5,380. These are some excellent payout numbers going into a weekend. Big shout out to these live funded traders. All right, guys. Thank you.
Shout out to them.
Thank you, JD.
Right on.
Nice job.
Nice job.
All right. 6857 now prints in the ES. The NQ 25,650. Gary in the chat says, congrats to all these payouts. I hope to get there one day. Hell yeah, you will, Gary.
Yes.
Still 70%
Real trading profit.
Real trading, yeah, real profits, real losses.
I it says, does Andre even trade?
See, yeah,
Oh, not this.
no.
Not
I don't know. Maybe, I don't know.
Does Andre even
Andre's
trade?
one of the best traders.
I have traded.
Yeah. He's being humble.
I don't trade much. We're driving because we're driving. The attention can focus on my front trades like a Chike, like a Dakota, like a Diamond Hands. It's coming up after morning recap, right?
Andre traded, there wouldn't be enough money left up.
There, I like it. I like
There
that
we go.
baby Chike, too kind. Absolutely. I'll say it's difficult. We watch slow markets. Trading and driving is very hard. Also,
Yes,
I
it
have
is.
a potty mouth. I have a potty mouth when I trade, so it wouldn't be good.
Oh, that's great TV.
Yeah. Look, micro Bitcoin trade 90,590. Bottomed out at 89,810.
VIX keeps
Ese cabrón le dio maduro que le
16,
puso 15 lotes, cabrón. 15 lotes. Pero yo le voy a dar más cuando yo haga mi switch, le voy a dar más duro.
Didn't keep going now.
It did not do the jack.
Todo bien, todo bien.
No.
Yo creo que vamos a
Boys are busy.
outside.
40 off before I fall asleep.
Yeah.
Would have just spontaneously combusted there. Level green smoke.
Yeah. Green Year's Mellow Street. Is that anything?
Let's see. Mike has that.
All right, we'll get you. Yeah, Q.
Untreated. Set to give same day with Target Circle 350. starting with $1,000 account. You're not going to set a daily profit goal. Your only focus is going to be every single trade you take, you're going to risk no more than say 10% or $100 max. You're not going to increase your contract size until that account doubles, and that's going to be your first benchmark. So phase one, your starting balance is going to be $1,000. You're going to be risking $100 per trade, and your goal is going to be to reach $2,000 before moving on to phase two. Once you double your account, phase two, now you're going to be risking $200 per trade. And this is going to give you more room to scale up in size to increase trade two. Now maybe you can trade 5 to 6 confidently while still keeping the same risk percentage. Now, once you hit that $4,000 goal, you can move on to phase three, and maybe you can even move up to one mini contract or start moving toward multiple minis. Now risking $400 per trade with a goal of $8,000 before scaling up again. Always adjusting contract size based on risk and stop loss, not based on emotion and what wants to happen. This way, you can go little by little without forcing profits and putting your whole account at risk. Number four, if you want to step two, let me show you how to actually calculate how many contracts you can generate each phase, this is the trade setup, and how big your stop loss is. And this is where a lot of traders mess up and use the same contract size, no matter how big the risk is. And this is how you're going to overexpose your account to risk and end up blowing. So let's say you're phase one with $1,000 account. You're risking $100 per trade, which is going to be 10%. So we're going to look at two different examples, one with 106 stop loss and one with a 56 stop loss, so that you can see based on the trade, how should I calculate my risk and how much contract I'm actually doing. So let's say your stop loss is 106. You're risking $100, and every micro or trader has that? Price $894. Hold on. Is it open? Is it open? Hit 9. See, 9. Still hasn't opened? Oh, I'm coming. Supposed to open. Do it again, the A-back one.
The lights on the right. another coffee. Mine just got cold. See, my strategy is so on point, bro, that I don't even need to look at the charts that much.
You have that recording, and I'm right here walking around.
Yeah, you saw it?
Now you gotta tell me that you're recording.
Nah, but it's pointing to the ceiling. Isn't it?
Yeah. No practice on the phone. No, you got it.
Yeah.
You're recording your life, not mine.
Yeah.
You can buy a sign that says on air
Unless, yeah.
and put it on the counter. On air. Jessica's over here running around, her titties out and shit. And everybody sees it.
We're live. Let's see.
Some water or something?
Yeah.
You want coffee, bro? You have coffee.
Yeah. This shit will keep me awake for 3 days.
¿Sabes que toda tiene una vaina que no sé qué tenga?
That shit's like a drug to for me. Thank you. So what are you doing right now? You looking for the setup? What are you
Yeah,
doing?
I'm trying to see like if there's any setup right now. But to me, silver, it has dropped a lot. Look at that. US 500.
So
Nasdaq dropped a lot too.
go back to the 9 out, the 9 o'clock candle.
Let me take this straight right here
What are you doing? Why are you taking that trade?
because I was waiting for this one.
So that's the okay.
So you
that's
see
that's
the
the
line?
little touchback right there.
So this is the little retrace right
Retrace.
here, and then this is flat. I like to see that flat because usually that means that there's too much sellers in there. And another confirmation is that gold and silver, they usually do the same thing. Usually, but silver does it more powerful. Like if it drops right now, this will drop even more. Like this gives me the percentage that it changes throughout the day, and I see which one has the most. Right now, the one that's dropped the most, 6%, is natural gas. So I've been trying to grab natural gas because any bounce is big on natural gas. I'm gonna show you now. So this morning, it dropped here and it went poof. It dropped here, went poof. So I'm waiting for it to do it again right now. So once it hits this green line, I start to see it, or this yellow line, I start to look for a buy in this natural gas. It's 130. Usually at 130, there's like a little move. I like gold because this is gold. So gold. What I don't like is down here. You see the 1 minute? It's like I'd rather wait till it goes up back, touches the line, and comes back down. But it could just go from here. There's two resistance here. That one and that one. So
What happened there? What did you just do?
So you see this
No,
resistance?
you just took that off.
Oh, I deleted the entry I had.
Why?
I didn't see that it's moving. Let me put it again.
And what about the spreads? Because you over here trading in the 15 seconds. The spreads don't fuck with you.
Not really. I'm only doing one lot. You see this right here? This is natural gas. So natural gas is moving fast. I'm trying to catch it. Look at what it did here. You touch here, it went poof. That's a big move.
Yeah.
So if I can catch one of those moves, because it's been doing, I already did it once here, once here. So I'm trying to see if I can catch it. Let's see.
This is the what's it called? The top, the
Mira, ahí lo cogió. You see it? So as soon as it gets green, I start moving this up. And I usually automatically, it'll come out as negative 100, my stop loss. But I move it up as it goes up. So peep how fast it moves.
this is the funded trading. So is this
This
is
is the
this
express. This is a real, no, this is a real one.
Okay.
This is express. I'm up 2,300.
So like you don't have a limit on how much money you can make, or you do?
No, I don't have a limit. I don't know what I can make. So see how in the 15. So if it comes back up, I will be in instead of one time, I'll be in twice. You see, it took me out. But I didn't lose much. I lost like $50.
Because you moved it.
Mm-hmm.
What it?
So the key is to minimize how much you lose in each trade.
Yeah.
Even though you're only risking 100, but you don't want to take a $100 loss every time.
Yeah.
If you can minimize it.
But if you would have kept it at 100 loss,
Mhm.
still in right now.
Yeah, but it would have took me out. With the spread, it will take me out. I'd rather bring it up.
Okay.
And it take me out themselves. You know?
Where's the spread line?
I don't put it because I just want to see the
So
clean.
the spreads must be like. Because in forex, like, you can't put a trade in there.
Yeah,
that
but
close.
this
There's
is
no way in hell.
futures. This don't have a lot of spread because it's a simulator. Even though it's a real account, it's a simulator. So it doesn't have a lot of spread like the real market does. That's why when you trade a real market, it's a little different. That's why Jessica was having a difficult time trading it. But you see, this is gonna spike up crazy because it's down 6%. You see,
Yeah.
that's a lot in the
Yeah.
day.
Can you explain your strategy in 5 minutes? Top to bottom,
Yeah,
comprehensive.
I actually have a cutout for it for my strategy. You know, and I think you're gonna understand the cutout better than you're gonna understand it regardless. So look, it's hitting the yellow line right now, so this could bounce up really hard.
So now you're looking for what do you
I'll go down to the 15 seconds and see if I see this line get crossed. So let's see. Crosses that line, we're in the money. Let's see. But I guess I'm not, yeah, this is a yellow line. So every time he hits one of these lines, I'm taking it because he could bounce.
As a buy?
As a buy. Because it could bounce up. Like it did here. Like it did on the
you just put in a trade right now?
yeah. So I'm gonna put it here. I only lose $30 or 40 if it comes back down. But you see how this bounced so hard off of this blue line? That's why I like to buy on these lines. And right now I hit the yellow line, so that's why I got in. Because it could have a big bounce. Because this is down 6% on the day. It has to have a retracement. Somebody has to take profit.
Right.
And it's in my zone already. So my zones, I have the lines from my zones. So you see, now I'm up 40. I keep bringing it up. If it comes against me, I only lose $20. So all this money that I lost is not stupid. It's just on small losses. But I've taken a lot of trade. One of them is going to pay me like $2 bands.
Right.
You know?
Yeah, gotcha.
So the key is to outdo your losses. See, now I'm up $10.
You know what the real key is? To have all your bills paid so that you could be able to sit here and wait for these opportunities.
Nah, I go more than 300,000 and I'm still here. What do you mean? The whole point I'm doing this is
to have enough cash flow though to not.
The whole point why I'm doing this is to be able to do that. But obviously, you're not gonna be like.
You need to have cash flow.
If you have
everything.
If you had money to do this, you'll lose more money because you'll take it.
I'm saying
you're getting debt. You're doing this.
I'm not saying about like having like a lot of money or not. I'm saying being able to cover. You know, like you can't have the world lighting on fire while you're over here sitting, waiting for one of these trades.
If you know what you're doing, you could. If you have a skill, bro, like you know what's gonna be the outcome.
Okay.
You're gonna.
You could go weeks.
There you go. Come
I'm
on,
saying
man.
you cannot have
Hit
your
'em up.
world set like catching fire, right? So basically all your problems waiting there while you're over here waiting for an opportunity.
Yeah, you can.
Why would you
I
do
mean,
that?
not swing trading, day trading. Yeah, you can.
Because you could listen,
But
just
I
like
did
the
it though.
videos. Yeah, but I mean, some people get lucky.
I did it though.
Some people
Some
get lucky.
all years in a row,
Some
back
people,
to back.
but so basically, you could go weeks without finding a good setup, right? You can go months without finding a good setup.
Nah,
If you're a
you
good,
find a good
well,
setup
according,
every
according
day.
to that video,
For swing trading, depending on how you trade.
Depends what type of
Your
trader you are.
strategy. What do you look for?
Alright, so I guess-
Are you an intraday trader? Are you a swing trader? Do you look
No,
for?
I'm a good trader.
You're a day
Good
trader.
What is the good? What is
Look
that-
at the video
what
that
is
you
that
sent me.
based on?
Play the video. Play the fucking video.
That's just a
Let's-
little bit more.
Let's all listen to that video right now. Listen to what he says.
Give me a little bit more. I'm gonna put it on the lessons over there.
That is the real key right there. I mean, yeah, don't get me wrong. You could be successful, but like,
I mean,
is
the goal
that
is not to
you could be
do
successful
it
this
on
year?
an intraday level. Obviously, you want to wait for good setups. You should be taking
Right.
quality entries. You shouldn't be there 5 hours straight trying to see if you catch something,
Right.
right? Then less is more when it comes to trading.
Exactly.
You're trying to leave your 9 to 5 job to work less in a smarter way and make more money, right? Substitute your 9 to 5. Now, you're not gonna put entries back to back when you don't see a setup. You need to have your setup first and foremost before you even go in the market. Before you even put an entry, you need to see why you're going in there. What do you see that you're going in there either on a buy or on a sell? You're not just gonna go in because oh shit, the market is moving. The market moves all the time. So
Right.
you know what I mean? You're not just gonna put a buy because oh my god, it's skyrocketing up. Like I'm gonna go on a buy. Like you need to know why you're going in on a buy or why you're going in on a sell. And your entry, how much you're putting on that buy or that sell matters a lot too, because you're not gonna go 10 minis, 10 contracts, like just because it's going up. Like that's crazy. Like, you shouldn't be risking more than 1% of your account size.
Yeah, and I agree. You gotta have your strategies, right?
You
And
need to have your strategy.
But what I'm saying is, right, within that like discipline and being a good trader, having your strategy, waiting. There's waiting, right? So you have to wait.
Yeah,
So
there's waiting.
now let's say
Yeah.
you have a bunch of responsibilities that you have to meet on this date, right? And now you can't meet them because you're still waiting. That's where the things overlap. Now you know what I mean? You're letting the world burn while you're over here waiting for something that may not happen today or
Well,
may
even
not
if
happen
you have a
tomorrow.
job or like if you have bills to pay, I don't get it.
If you have bills, if you
If
have
you
like,
have bills to pay, then obviously, you're not gonna make money and be able to take it all right away because it's a prop firm.
And
Now,
that's
if you
not-
have your own funded account, your own personal account, then yeah, you make 5,000 today, all you have to do is wait 24 hours and withdraw your money. But prop firm is not that way because there's rules
But-
that you need to follow.
exactly, right?
Mhm.
And so you gotta take that into account. You gotta know that okay, I have these bills to pay. I'm not gonna say like, oh, I'm a patient trader, I'm a good trader when
Well, you can though, because if you do the 5 days, for example, top set, you do the 5 days, you take out the minimum, you 5K, you have five accounts, that's 20K in 1 month. How much are your bills?
in 5 days you can go, is that like consistent in 5 days you're gonna be able to take
Well, you
money?
need to have 5 days of 150 or more. But if you have a whole month, let's say, it takes you a whole month, because you don't need to take out a payout weekly. If you're smart and you do the numbers, you don't need to take out a payout weekly or every 5 days. All you have to do is calculate, what is my monthly expense? Okay, so this is what I need.
Uh-huh.
Now in a month, you're gonna have more than 5K in a month trading. That's a fact. Now, if you have 5 accounts, your benefit.
So you're saying, okay, you have, let's say you have like, okay, you have 10K in that you have to pay every month. These are your
Exactly.
bills, right? Now you know that. So
Exactly.
if you set yourself up to trade, you could make those 10 bands and more.
Exactly, because you're doing it with more than one account.
Even though even by being a good trader and just patiently waiting, no matter what, in 1 month you're gonna make 10 bands. Aren't there months where you're gonna have losing months?
Exactly, but that's where.
So that this is where you get lucky and you're like,
No,
oh,
so now
you're
when you get
fortunate.
lucky, this is where you do money management and you say, okay, if I'm making 20 and my monthly expense is 10, I'm gonna set aside the 10, right, or the 20, And then I'm gonna keep trading, and I'm
Yeah.
gonna keep playing with the money that I have as profit. Now, Oliver, you're not gonna make 10 and
So
spend
that,
10.
but that's once you've been in the game for a while. But you can't be like, okay, I'm gonna get myself into $20,000 debt, and then I'm gonna
You
go,
can't do that, that's stupid.
you know. And that's basically what I'm trying to say.
Yeah,
You
that's
guys
not
have
smart.
ice? You have ice?
Nice. Like,
I don't think I have.
You have?
I have a regular one.
why you
You have
want
one ice? One?
No, I don't even have it.
You have another one of those I can borrow?
Another one of these for what? For you to take?
Yeah.
Yeah, take this one.
Leave it there. I'll take it.
Take that
You
one.
want ice cabrón?
But
So beef this, I have a limit buy, so if it touches this green line, I'll trigger me.
a limit buy. So that's okay. So that's gonna go. You're expecting it to go up.
Yeah, if it touches and it turns around, that means I'm betting it's gonna go back up. Stop. So limit buy means that it has to cross it down and then come
Okay,
back up.
okay, gotcha.
Right?
Yeah, I was. So that like it barely went down at all, and it got triggered because it did like a. Right, that's what happened.
I think it was a resistance there.
So what? So in that case, like,
Look at here, I'm up 200.
and what are you doing for your stop losses? You take profits or whatever, or trading stops.
Peep this. I put my buy on top of the pivot. Let's see if it comes back. This should go down here, this one. This, if it comes back, gonna come up back with force. Because it's already down 7% in the day, this thing. Gold, let's see, gold, I want to take a sell right here. Okay, hold on. I'm moving closer. Seems like it's gonna pop. Yeah, right there. So watch. Come on, run it big.
Or anything is possible with your discipline, right?
Yeah.
Discipline, when you follow your strategy, anything is possible. No, not every day are gonna be winning days, but when you get those winning days and you're smart, you know.
You know the
follow
Asian
your
guy?
strategy, you can make your whole money.
You remember that the
Every
Asian
day,
guy?
1 week.
What was the Asian guy that took out the 3 mil from Apex? J Cat.
Mm-hmm.
This nigga traded non-stop for 3 months to take out that 3 million.
Mm-hmm.
Like he said he had days that
He isolated himself.
he said he had days that he would just be like all night trading.
Yeah.
But he's not really trading, he's waiting for his setups.
Yeah,
He's-
he's
but not
actually
only
placing
that.
trades.
Not only that, but I suspect that he also,
He
like,
had drawdown days.
but I suspect
He had
that
like a couple
that-
payouts denied.
his world wasn't on fire. He had a calmness in his mind that he knew that if he failed at this,
Now let me tell you what he said.
would.
So you can cancel that out already. So basically, he was working almost 60 hours a week. All right. He said he quit his job after he noticed that he was having some inconsistency, and
After he noticed he was having consistency.
yeah. So then he's
So-
like, he said, my wife and everybody was telling me, what the heck are you doing? You're crazy, blah blah blah.
Mm-hmm.
You don't have money saved, this and that. This nigga, in a month or so, he took out $1 million.
You need to have a plan.
Obviously, you need to have a plan.
Yeah, you need to see profits. You need to see actual money that you're
Right,
taking
he-
out, like in your bank
he
account.
had
It's not
that-
like, oh, I see so and so is successful. Like I'm gonna go ahead and do it. Like no, you need to have a cushion. You
Right.
know, that you're taking
Or-
out that
or-
it works.
Even if you don't have a cushion, you gotta have a confidence that you know that even though your world is falling apart. You're gonna make it through this.
Yeah.
Like you have to have that confidence at least.
You need to have a goal, a plan. If you have a plan and you're a man of your word, you're gonna follow the plan, regardless how you feel. It's not
It's not
about
being a man of your word, it's more like sticking to being disciplined enough to stick to what you're saying.
exactly being disciplined is that you're sticking to your
Listen,
plan.
I'm gonna reach this much a day. No matter what happens, I'm done. If I hit this much, I'm done. Closing my laptop. I'm walking out. I don't see my setup within this amount of time. I'm done. You see me, I don't trade past 10:30. I don't. And I mean, you know, I make $500 today, and I'll just walk out, walk away.
So it depends your strategy. You just gotta know what you can do, you know. But my strategy, as long as my setup happens, I can take it. If I see my setup, I can take it. It doesn't matter what time it is.
And you have prop firm where you don't have to risk your personal money.
That's a
So
big
that's
change.
like the main reason why you do prop firm, so that you don't spend your own money. You're basically funding your personal account with prop firm money. So like, I'm not putting 50K into the market, I'm gonna put 50K of whatever I'm making from prop firm, not from my own personal money, not taking out a loan to go put it in the market. So that's stupid, that's retarded. And even if you have you fund your personal account, you're still trading with prop firm money. Well, as long as it lasts, as long as the prop firm is still there, you're still usable to fund your own stuff.
It's free money
Because you're learning as well, and you're practicing
with their money.
with their money while you're working on your own personal account with real money. And you see the difference, you see how different the market moves, you see the different things that are happening in the market, and you gain more experience doing that. More experience, more patience, because you're gonna see stimulus money is not gonna be as real market data. So you're learning patience, you're learning the psychology of it. You're learning how to deal with it. It's a win-win for you.
You don't do gold.
Yeah, gold is right here. It's just not ready yet. I mean, I will sell here if it comes down again.
You would sell there. Why would you sell there?
Because it came up to retest this line, and if it comes back down, then my theory is right. Shit is all gave me money today, huh? There's a bad one, you see? You see, it keeps touching this line right here.
Yeah.
I'm trying to grab it when it bounced completely off of it. Let me see. This is the 5 second. You can see what it's doing. You see, it went under the line, touched it, try to come back down. If it comes back up above this, then this might get hit. Obviously, if you see it in the smaller time frames, it's not as strong as the bigger time frames, the retest. But when I go on the smaller time frames, is to see what it's doing exactly in real time.
Why'd you move that down?
Because I see that it's creating a resistance here. So if it comes back up, it's gonna break it stronger. So the lower it goes, I'm more bring it down, so I can get a better entry when it turns around. Because this is my extreme area. This is extreme, like buy area. Extreme. That's why I'm trying to catch it here. So in my trading thing, look at this. I lose more than I win. But when I win a lot. Like right here. I risk that, I average this, so that's good. I risk that, I average that. way to cancel this shit. It's stupid. It's been bouncing hard from there, so I want to catch a big bounce. And if I can add to it, it's a blessing. This gray area, look at this, poof, poof. So that's what I'm waiting for. That's that they all been like dropping today. I don't know what the fuck is going on. La vida de otra vez. So I don't know. They see third time is a charm. 3 times already. Now I got it the lowest that I can get it at. If it doesn't go up from here, I don't know. I'm gonna have to look at something else. This is gold right here. You see how it looks like it's came back up for a retest of this red line and it's trying to break down. So I know what's going on in all of them. This is the Russell. The Russell moves more than the Nasdaq sometimes. So sometimes the Russell moves before the Nasdaq. So you see how it broke down from here down? The Nasdaq is most likely gonna break down to here. I just don't wanna catch it now because it's not moving. Let me see if I show you some real-time trading here. Well, you could see what I do, and then I'll explain to you what the strategy is. So here I want to add it. It goes on my favorite. It's too soon, so let me just wait. All right. This is the 1 minute. Let's see a W. Let's see a 5 minute. Let's see a W. Vamos a ver si se va esa desgracia.
Let's move this to 2070. And you move it like that.
Let me see if I can grab this too. That'll be a lot of money. If he jumps up like this one did. 15 minutes now. You see 3 touches. Like, what is it waiting for? I only move it here because it's in an extreme area, you know. So usually a big bounce happens here. This could be the time I can make 2 bands. If this bounces up like it's been bouncing, I'll make 2 bands.
Yeah, I'm getting it. I see it. I see how the settles work. The other two don't set up an automatic. Oh, okay.
That's the process. You waiting for it, you know. Right now it happened. I could have had 2 right now.
I get it. No, it's not always gonna hit. I get it. You're fishing right now.
Mm-hmm. Mira aquí, that's a crazy jump. Wow, After a crazy jump, for it to come back down like that, most likely gonna try to keep going down to this area.
What are your requirements right now? How are you gonna cash out? Like what do you need right now?
Right now, I need to have 3 more days positive to cash out.
Not consecutive or
No, not consecutive. Yeah, I don't like how
and
it is.
is there like a limit to cash out? Like you can't cash out $100.
The most you could cash out is half of what you made. So if you cash
Oh,
out
okay.
1,000.
Gotcha.
Yeah.
And to get to this step, you had to pass a different.
Yeah, the test, the regular test, you have to pass that to get to a real account. Yeah, this is gonna bite me in the ass for a minute. This is gonna be the last one I take if it even gets hit. Just because this is the third time it's touching this area. Let me see that 4 hours. Look at the 4 hours. The 4 hours touched it, and look at where it went.
Mm-hmm. But you didn't have a basis to catch it there, did you? You didn't have. You only have.
No, because I wasn't trading at that time. It was like during the nighttime.
But
So
like you wouldn't had a reason to get in on that. You wouldn't have known that it was gonna bounce. You didn't have a zone.
Yeah,
there.
I could have got in there. I had a zone there. This zone's been here. This one is like that one is. Those zones already been there. I could have got in here, but I don't trade at that time.
But so this zone right here
This zone right here, I have right here.
was made
was already there.
based off of what?
Off of the 9 hour candle. So you see, this is the first time it hits that on the 4 hour. It hits this right here. So I'm expecting a bounce and a very hard one. But it's not going.
What's your limit right here? Your drawdown right now.
I don't have a limit. I just try to recover if I'm down. This is not one trade. This is thousands.
I know. Yeah, that's what I'm learning. I'm learning.
So I'm averaging more than 100 trades to get one rate.
But so how is it that you lose this account? That's what I'm trying to ask.
If I lose the whole 2,000.
So this is minus this.
Mm-hmm.
So like at the end of the day.
So I had 3,000 now minus 2,000.
Oh, so it's automatically.
Yeah, it's automatic.
That's just telling you today.
Mm-hmm. But I was up earlier, 500, and I just came back down again. But that's my strategy. That's how my strategy works. So you have to be okay with that.
Mm-hmm.
To catch the big moves that I want, I have to be okay with that. I just need to lower my losses every time I get in a trade. As much as I can. And the pivot points, I work with the pivot points. That is tough because this is a down market. So I'm just going to give up on this one. Yeah. I know this is gonna bite me in the ass and go crazy out. Okay, let's try one more time. That's not a big resistance here. I don't know how it's not bouncing hard. Like it's tricking people. All the people that are buying here, they're trying to get tricked. So this is basically a normal trading day. This is what you go through. Try to figure it out. Basically.
It's not rocket science. Ooh, right there, trapped all of it. So fake out.
A lot of buyers got trapped right there. So if someone could be down 5,000 just off of that, trying to buy here because it's an area of buyers.
Might be a fake out. No.
If it's a fake out, I'm gonna be the first one to catch it because I'm under 5 seconds. You know, I'm not gonna only catch it once. I'm gonna catch it a few times. Si no, sé que se vaya para abajo. Gold is stagnant. Gold is not even moving. Shit is not moving at all. See, this shit's gonna come back here. De un abuelo de ojo, esta vaina ese. It did that this morning. And I wasn't in because I was like, fuck, I gotta wait till it touches it again. Now I touched it 3 times, still not doing it. The first time it touched it, grabbed it, and it went poof, 100 points. I would have been like 2-3 games. I slept on it. Because I was waiting for the second touch or the third touch. Sometimes
So you can do this. Like this is all day. You can do that. The market doesn't close.
At 4. 4 to 6.
Oh, okay. 4 to 6. All of them are the same, like that. 4 to 6.
No, just the futures market.
And the most volatility happens when the market opens
At 9.
at
At
9.
9:30.
You
Usually.
trade that?
Yeah. Usually, but sometimes you can get volatility late in the day, like around 2 or 1 p.m. Because people get tricked too, because sometimes in the morning there's no volatility, but then it happens at 10, or it happens at 11, or it happens at 12. Like today, there was a lot of volatility this morning, but that's why I'm seeing if it can happen now, because especially this one, because it's like, hello, he's down 6%. That's like, they'll stop the stock market if all of them go down 6% or 5%. Like, don't let nobody trade. If the Nasdaq does that, it'll get stopped by everybody. If only the Nasdaq does that. But this is natural gas, which is weird. It's dropping like that in wintertime. Natural gas. You see how my risk is so short right here? I'm right in that extreme. So it's like, where are you gonna go? You gotta go up. You know? ¿Viste lo que te digo?
Boom. Boom. God damn. Just take all that, man.
Espérate que yo esperé mucho tiempo. Aunque sea Secure 130.
My God.
God.
Nigga, it's
What do you think? Secure another 200.
350, take it.
200. Pues sí se dispara.
Yeah, you know what you're doing. I'm just spectating.
I'm grabbing this 200 so I could keep playing, if anything. It's like poker, bro. You just gotta know when it's extreme. There's not a lot of hands.
You gotta fold all your hands, like me. You know, niggas be talking shit when I'm folding everything.
Exactly.
But it's because
You see how many I got stopped out as me folding.
Mm-hmm.
I cannot just hold it and wait, because pretending that it's gonna keep turn around and you can without gold how I drop. I could have caught that. I had that thing right there, remember?
Mm-hmm. This shit is.
Pero that's the extreme. Bro, imagine if I would have caught it when it did this right here. That's insane. Would have made bank.
This is a big thing. I could see.
You just gotta know, like, you just gotta be strategic. Like, you're not just gonna go in because you're going in on the extreme, which means you can have a tight stop loss right here.
Mm-hmm.
You know? Yeah, Tremira Gold, that was a good one. I should have left that in. Parece que a la 2, ella se mueve mucho a la 2. I always notice that.
Right before 2.
Yeah, like I always notice at 2, I have mucho movement.
Boom. You got 190 secure no matter what.
Yeah. So that's another thing too. You gotta secure your money once you got it, because that'll give you more room to trade at least 2-3 times more. You know, until you can catch a big hit. That was a big hit. If I had like 3 lots, 4 lots, that would have been like 5,000. Alright, so now what I'm gonna do is I'm gonna see what it does. I'm probably gonna retest again, touch this, and then come back up. I like this silver trade. If gold did that, silver most likely will do the same. So let me see. Yep, it's gonna do it. So 5 seconds on the first one. And the first one. If it's gonna do that, we good. Gold already dropped. And I don't know why silver is going the opposite way. Silver has been trying to come inside of here for a long time, so I'm expecting that to happen. Mira, gold, mira. Y este yendo para arriba. The market's acting crazy today. So this one just reached my other song, yellow. I guess here or here is a buy. I'm trying to catch this freaking natural gas. It's pissing me off. How did I not get in there with the 2? Ok, vamos a darle otro más ya para sacar la gana. Silver's gonna drop like a motherfucker. Watch. How has gold dropped that much, and this one hasn't dropped in 5 seconds? Let's see. Mira, double bottom there. Let's see if this happens now.
So, oh my god.
What?
I'm done for, man.
You already opened up your practice?
No, I was gonna do it yesterday, but I didn't have my card. I'll probably do it today. It's my shit. It's $30, right? So what do I try for that?
Mm-hmm.
Then what do? I do the test?
You have to do the test, which you gotta make 3
Do I gotta
times.
pay for the test on top of that?
No, that's the test, $30.
Okay. And what is the requirement for the test?
You have to make 3,000. Once you make 3,000, you get a real one.
3,000 in any time frame? No, none of that. Like, oh, you can't make more than 3,000 in one day. Bullshit.
You can't make 1,500 in one day on the test.
Oh shit.
You can make 1,500 one day and 1,500 the other day. 3,000, then you can get a real one. In the real one, you don't have.
And how many day trading days do I have to have? Is there a limit?
No.
So I could do it in 2 days and I don't have to trade anymore. Just wait.
2 days and you get the real one right there.
Oh,
Yeah. Yeah, you have to have 2 days at least trading before they can give you a real one.
no drawdown. What's the drawdown?
2,000, you can't have
Oh, shit.
2,000 drawdown. Yeah, but if you do one, if you're risking $100, that's pretty hard.
Yeah.
You know, if you get the concept,
Yeah. All right, let's do it. Fuck it. I'm gonna open it.
it's a cheap thing, cabrón.
So then they transfer you to this with 50,000 simulation, and then
Everything you make here, you get it
that's lit.
for $30, bro. That's what I'm telling you. What you have to lose. She really don't have nothing to lose.
So now, when I make the comparison between that and poker, you know, I'm telling you, like in poker, you could have $1,000 and you have 4 chances at making 5,000.
Mm-hmm.
This you have $30 and you have a bunch of chances to make unlimited amount.
Exactly. So it's like, why are you wasting your time?
Right.
And this is more exciting because it's just on the computer.
When you get for $30 you get if you're doing $100 draw a risk, you have 20 tries to make unlimited, as opposed to in poker you have 1,000, you have 4 tries to make. Yeah, that makes sense.
Es un negocio redondo, bro. Mira, parece que natural gas is gonna drop more than 10% today. There's no way that's coming back. There's no way that's coming back. All right, so let me show you the setup that I look for. Let me put one here just in case that shit decides to come back. I'm actually gonna show you one that happened here in natural gas. That's a beautiful trade, man. It's too risky. Mira this gap right here. It's too risky to go down here. Yeah, it does. This is on this trend line. This could be a fake out, come back in. Yes, if it comes back in from there, that's like money. Talking about money. So I do my graph basically, like I paint it. Let's do oil. 'Cause I haven't draw that one yet. Okay, so you'll see your map like this. I put it on the 1 hour. Then you find the closest zones to where the market is. The market is right here. So the closest zone is to where there's a 9 a.m. candle down here. Right here. It's a 9 a.m. So I can do a square inside that 9 a.m. candle. Is it this one? Yeah, 9 a.m. candle. So this is inside of a zone already. Then what I do is I grab the Fibonacci retracement. See, you put a star on it, but I only use the fib. Well, first you put the pre-WAP, the line, the blue line. So we got the fib, right? So
What are the settings? Is that automatic?
Automatic.
You don't have to tweak the setting for frequency.
So look, so I grab it from if the market is coming down into the zone, I grab the fib from the bottom to the top. Which that'll give me my fib levels, which is like.
So it's a fib retracement, right?
Mhm.
So that means that.
That's where I'll retrace to poof.
So, but like the way you draw it is different, up or down. So if you're drawing it up, the bottom level is what?
So remember, it's an uptrend right now. We're in You see it's up.
But let's just understand.
So this is
the
a
fib.
retracement.
I get it.
So it's
Oh.
supposed to go up because it's a retracement. So the retracement levels are 50% of the zone is this orange line.
So this is
So I know
0 up here.
Hmm?
Where is 0?
0 is this.
0. So
Yo, cabrón. So
Cabrón, nigga, you took mad long.
I've been hustling, bro. I came back to positive 500.
Oh, you just got back?
Yeah, and I just went down again to 1,000. But that's fine.
Damn, nigga, you negative 1,000, nigga.
Yeah.
Negative 101.
101?
All right. Yeah, but I was watching you for a while. I'm in crude oil right now.
Yeah. I'm in crude oil right now, too. I'm trying to show Mora how to do the zone.
Oh, Mora's here. What's up, Mora?
yeah, what up, Jonathan?
What up, bro? Hustling all day. I just turned my phone on.
So, mira, me entró ya el... Alright, anyway, let's go back to...
Cabrón, go to the 1 minute on crude. Check out the chart.
I'm looking at right now how I'm doing the zone on that whole. Crude, I think crude oil is dead right now. So just wait. Because at 2:30, there's going to be a movement.
Oh, it's 2 over there. It's 3 over here. But remember, I gotta stay on the top of the game.
So you see the fib?
Yeah, but retracement. When I think of retracement, it would be from the swing low to the swing high. This is your 0 retracement. This is your 50%. This is your 100%.
We only do the fib inside of that 9-hour candle, which is our zone.
Oh.
So the fib has to be from the top or from the bottom of the candle.
Right.
Which that's our zone. We don't care about any other zone but the 9-hour zone.
But
no,
this retracement that's happening
is for the top.
Right.
We're not doing that. The strategy consists of what I'm showing you. So forget everything.
Why does that work?
Because I'm not showing you right now. Let me show you first, cabrón. Jeez. So this is the 1-hour candle, right? The 9-hour, right?
Yeah.
We did the square, and now we did the fib from the bottom to the top because the market is retracing into. So it's retracing to come back up. That's just an assumption. It's not real in real life.
Yeah.
You know, that's just a probability. So when we're here at the orange, which is the 50% of the fib, which means the 50% of the zone.
I need my mouse. My bad, I'm going on mute. Hold on.
That anything from 50 down is already oversold. So I usually buy it here first. If it doesn't go, I buy it here. If it doesn't go, I buy it here. Now, if it doesn't go, then my last buy will be here. So that means I lost 3 times before, 4 times. You know, just like I was doing on the other one. So another thing that you have to keep in mind is the 5-minute VWAP, which is this line, is very important to know when it's gonna go back up. Right now, the VWAP is above the market, so we do not want to buy yet until we see it cross this line up. That's what you're waiting for. That's what you gotta be patient for. That's the holy grail for you to win all the time. But obviously, sometimes you see the market drop 6% and you're in the zone and it hasn't crossed the VWAP and you see in all those swings, it's common sense that it's gonna try to do it again. Like natural
Say that
gas.
Again?
So sometimes you see natural gas drop 7%.
Yeah.
somebody's gonna take profit.
Drop 7%, crosses the VWAP.
I don't wait till it crosses the VWAP when it's 7% down,
Okay.
or when it's 3% down, or 2.5% down. This is not normal. When it's only 1% daily that it goes up or down.
Mm-hmm.
So that's not normal. When I see 6%, you're talking about big players. So they already made 6% of their money in one day. So I'm waiting to see when they're gonna cash out so that can skyrocket.
Right.
I was trying to catch it because you've seen the swings every time you touch the bottom. You've seen those swings. I was
Yeah.
trying to catch those swings. You can make money off of swings if
Yeah.
if they're clear to you. But that's just your assumption.
Yeah.
I do that because I see it a lot and I can make money off of it already.
you
But
see-
the strategy is not that.
Mm-hmm.
The strategy is waiting for this
Mm-hmm.
to get crossed first before you start buying inside the zone. You understand?
Mm-hmm.
So I'm gonna show you an example. This is just drawing the zone. So I drew the bottom one. Now I gotta draw the top one. So I find a 9 a.m. candle here, right here. So the zone is very close here. There's another 9 a.m. candle right here. So if it comes back in there, we already know this can turn around from here. I have this as a zone too. Hold on, let me delete it while it's not there. Oh wait, that was the square.
Control Z now.
So this is another zone, and it fought in there for a while. So this, I wouldn't take that as a strong zone because it's too close to this zone. This zone is more important. So I will look for the next one up. So the next one up will be, what is 9? Okay, here somewhere.
Can you put 9 a.m. dividers on these?
Yeah, you can do it. Let's see like clear hours because I'm gonna find like, let's see, 9 a.m. Right here, 9 a.m. So I'd rather use this one instead of this one because it's, you always have to have some space between the zones. So boom. So if I see it break out of here, usually it's gonna go to this zone, the next big zone, which is this one. There's a zone in here at 9 a.m., but it's not really strong because it's connected to this zone already, to this zone here. It's not really strong. So this is the real zone. It faked everybody out up here thinking it's gonna go up, Poof. Came back in. Poof. So now let's put the
Going from top to bottom because you're waiting for it to retrace. Okay. Okay.
yeah, we only trade off of that fib and the VWAP.
So you're looking for a sell in that zone.
Mhm.
That's why you put it from top to bottom.
Exactly. So you see, simple shit. So and I just wait for the market to get into my zone. Right now it's in my zone, but it hasn't crossed the VWAP on the 5 minute, which is my trigger. Once it crosses that, then I start looking for a buy. I'm gonna show you where this happens a lot. In the Nasdaq happens a lot. You do respect some more. So keep the Nasdaq. This is all-time high for the Nasdaq. It's another song, but I don't consider it was too close to this one already. But let me show you in different times this worked out good. Actually, let me see which one is closer. I have them on the 5 minutes to see if it crosses. If it doesn't cross, and I'm not really looking at it. None of these have crossed. This is the closest one to cross, I think. No, it's not. 5 minute. This is the closest one. The 5 minutes right really close to it. So let's click that there. Gold already crossed, but to the downside. See it here. You see the retest. This is a perfect setup. I'll tell you why. Let me strand this out. So gold, this is my zone right here. It broke out of the zone, right? Oh, I can show you here. This. So here, boom, it came here inside the zone. It broke inside, came up, faked everybody, came down to the bottom, and to the top again. So my zone, look at the zone right here. This is the first time we went in here. So I'm watching it. It crossed right here. You see the cross? My entry would have been, obviously my entry would have been down here because I trade on like 5 seconds. So my entry would have been like around here. You see the cross right
Then
there?
retest.
Retest
The
my
entry would have been
on the pivot. So I would have caught all this all the way up here. My stop loss would have been like under this. So I would have caught that move. Then I'll wait again. Okay, crossed again. I could have got in here, this little thing, and got a little bit of money, but it would have took me.
So the reset is the crossing, or like the so you caught it once. It crossed.
It went up. This was already a trade.
Boom, crossed. You're waiting out for the pivot.
Pivot
Getting
here.
for a buy. Boom. Took profit. Now comes back in here, cross. So now you're waiting for a pivot up here to sell.
No, I don't look to sell. I only look to buy because we're right now.
Oh, so you're looking for the pullback here.
Yeah. So you see how this one pulled back too much? So I'll wait till it goes above it again. When I see a little pullback like this, I get in right there. And then I'll take this little move right here. You see? So now here I would have never took one because there's no pivot. So I touched the line, but it broke through. So now I wait again, it broke again above it. Now I'm looking for a retrace. This is not so close, so I probably would have never taken this. But it kept going. This one, I probably would have not taken it because it was so high. It's too away from the line. Too much away. So I wait, it came up, came here. I would have put one here by on top of this one. And I would have got this. That's it. Then here, boom, broke down. I wait till it comes back up. It came back up. Nothing, it didn't give me an entry because it never came back. Never came back until here, but it was under the pivot. So I would have put one entry here, but I would have not gotten because it kept going down. So now we're at the top. So at the top, I started to look at this and I say, hold on, we're at the top of the thing, of the resistance. We got a breakthrough. It's a retest. I put a sell stop right here because we're at the top. So boom, I could have caught this. So I'm trading inside the zone. That's why it says trade in the zone. So it's very simple, you know, but it's just waiting and being patient to see it. And you're seeing it play out, you know, but sometimes I take more risks than I should because I didn't wait for this on the natural gas. I could have been good. I was only down like 300. But trying to take that natural gas move, which is a big move, because if I would have caught it, I would have made 2 bands. But sometimes you got to risk, you know, as long as it's a controlled risk like mine. I'm buying at the extreme of that zone. You saw that. And there was big pushes from there.
Mm-hmm.
So that's basically the strategy.
Go back to that one to see what it looks like right now. But it's been bouncing around there.
Let's see. Natural gas.
So it's still there. Boom, broke down.
It could still come back, but You gotta remember, if it doesn't,
There's no breaks in the VMA though.
there's no breaks in the 5 minutes, so it's like that's why this is risky because it hasn't crossed on the 5 minute. I was just trying to aim it to see if I catch one of these. It's usually repeat itself. Those are big moves, big swings off of this support line. So it's okay for me to do a swing from here because usually we'll go up at least 25%. This time we didn't even do that. That's how much sellers are in this. And there's so much sellers that is, mira eso, 7.5%. That's not normal. You ask ChatGPT, you'll be like, oh, that's very extreme.
What is this?
Natural
quotes?
gas, it tells you that percent change per during the day. Today, this shit dropped 7%. That's a lot of money.
So it has to come up.
So when it comes up, it's gonna come up at least 3, 4, 5%. That's what I'm trying to catch. Those are the big hitters that you make sometimes.
Yeah, I'm gonna try to get on it today.
Yeah, sign up early so that way we can do everything ready, and we can do that thing. Bro. It's a beautiful job to do this, bro. I just got clapped today, but I can make that up later or tomorrow.
Let me go get moving.
Yeah, so jump on. You got the 40%. It's only $30. So you go by the bank, do what you need to do.
This shit. Alright, I'll catch you later. Thank you for this. You gotta sign me out
What are
already,
you gonna do right now?
I don't know. I'm gonna figure out my legs.
You trying to do a quick game?
Or what? Chess?
Yeah.
You don't got the skills, my boy.
That's a quick game.
We're not doing that.
One quick game, we're gonna be.
I'm about to go bring my food in here and heat it up.
Yeah, I'm making it there right now too. Don't
Let me go get it.
okay. Don't warm it up. I'm making it there too. It should be almost done.
So I'll wait for your mistake. Let's see
Yeah.
how you're poisonous.
Yeah.
Yeah, let's play this quick game, bro. You can warm up your brain at least.
Yikes. Nice. So
So
I
you
thought
always-
I thought it was more complicated, like in the sense of like, those like you needed to know like contracts and shit. Like you needed to understand all that.
That's just making people stupid because you get stagnant learning all that shit. All you really need to do is look at the market. Experience is to learn, but I figured something out in all this time. That in order to learn, you have to live it. That's the only way that you're really gonna learn by living. Because you've seen it yourself, so you know how it's gonna react. Yo, Jonathan, you still there? Freaking Jonathan. Jonathan's at his job waiting for it. He's down $100. Yeah.
I got lights up here. You like being in the dark?
Makes me feel more like
No, turn on the left side.
Yeah, turn it on right there.
You get that's fine. Let's see. Put it down.
So, let's listen to some Livermore overtrade. Right.
When they appear, and when to try trade, everyone wants action, but the market isn't a slot machine. It's a weighing machine, and it's a waiting game. You don't get paid for being early. You don't get paid for being late. You only get paid when you've got the setup, and you've got the patience to wait for it. Now, why do most people fail at this business? Is it because they can't read a chart? No, plenty of them know their lines and their bars. Is it because they don't have enough money? Not always. They fail because they cannot wait. They must have action, like a man who must have cards in his hands. That itch for excitement, that craving for movement, it's poison in trading. Have you ever caught yourself staring at a chart and thinking, well, maybe I'll just put something on just to be in the game? That's the urge that empties accounts. When I started out, I was a boy in a bucket shop, watching tape tick by, nickel by nickel. I thought the trick was in being clever, spotting every little wiggle and trading it. And sure, sometimes it worked. But most of the time, it didn't. I'd win a little here, lose a little there, and by the end of the week, I had nothing to show for all my effort. That's when I realized it's not the constant trading that makes the money. It's the sitting. It's waiting for the real play to show up. Doesn't that sound strange? That you make the most money not by trading, but by waiting. But it's true. Let me tell you, the market has a way of punishing impatience. If you chase, you pay. If you guess, you pay. If you force trades, you pay. But if you wait, if you sit with your hands in your pockets until the picture is clear, you'll be amazed how the odds tilt in your favor. The trick is believing that you don't need to be trading every day. Do you think the big money is made in constant skirmishes? No, the big money is made in the big moves. And big moves don't come every hour. They don't even come every day. They come when conditions are ripe. And until then, you wait. Here's the thing about setups. They're like a train schedule. If you miss one, don't chase it down the tracks. Another one will come. But you've got to know what train you're waiting for and where it stops. Most traders don't even know their setups. They just jump on anything that moves. That's not trading, that's gambling. And gambling is a fine way to ruin yourself. You wouldn't walk into a casino and think you can beat the house by playing every hand, would you? Then why do it in the market? The best trades I ever made, the ones that paid for houses and cars and everything else, they didn't come from luck or hunches. They came from setups I knew, patterns I trusted, conditions that lined up. And until they lined up, I did nothing. That's the secret most won't accept. Waiting looks like doing nothing. But in truth, waiting is work. Waiting is discipline. Waiting is the trader's real craft. Can you sit there with a chart in front of you and do nothing? Can you hold back when your fingers are itching to click the button? That's the test. I used to think I had to catch every swing. Up, down, sideways, if there was a move, I had to be in it. And you know what that left me with? Commissions, mistakes, and a bruised ego. Then one day, I caught myself. I realized I didn't need every swing. I just needed the fat part of the move. The big middle, where the odds are clear, the momentum is there, and the setup is undeniable. That was a revelation. Do you understand what I mean? The market will always give you chances, but not all chances are equal. Some are noise, some are traps, but a few are golden. And you've got to train yourself to wait for the golden ones. Now, let's talk about charts. Charts are your map, your compass. They tell you where you are and where the market has been. But they won't whisper the future in your ear. That's where setups come in. A setup is nothing more than a condition, a signal, a set of circumstances that tilts the odds. Maybe it's a breakout above a range. Maybe it's a pullback to support. Maybe it's a volume surge that confirms strength. Whatever it is, you've got to know it like the back of your hand. Because if you don't, you'll see setups where none exist. Tell me, have you ever forced a pattern onto a chart just because you wanted to trade? That's the danger of impatience. You start to see what isn't there. And here's another truth: the market won't reward you for almost setups. Almost doesn't pay. It's either there or it isn't. When it isn't, you wait. That's what separates the professionals from the amateurs. The amateur needs a trade. The professional needs the right trade. Can you see the difference? I'll give you an example. In one campaign I ran, I waited weeks for the stock to form the right base. Every day, it wiggled and teased, but it wasn't ready. The boys around me said, "You're missing moves, Jesse." But I knew better. Then one day, the volume swelled, the line broke, and the setup was perfect. I went in heavy. That one trade paid more than a dozen small ones could have. And I could have missed it if I had wasted myself chasing noise the week before. Doesn't that make you think about your own habits? Patience in trading is like capital in the bank. Every trade you don't take, every bad setup you skip, that's money saved. And money saved is money ready for the right play. The market will tempt you with half-formed patterns, with maybes and almosts. But you've got to resist. Why? Because your job isn't to play every card, it's to play the winning ones. Do you sit down at a poker table and shove chips in on every hand? If you did, you'd be broke in an hour. The smart player folds more hands than he plays. It's the same in trading. Folding is part of the game. Now, I'll tell you something about wealth. Wealth in trading doesn't come from 100 trades a week. Wealth comes from compound profits, from stacking gains over time, from avoiding the big losses that set you back months. And what causes the big losses? Impatience. Impatience to force a trade when the market isn't giving. Impatience to double down on a losing idea. Impatience to chase a move after it's already run. Tell me, have you ever chased a stock after a big breakout, thinking it's just getting started, only to watch it reverse and slap you in the face? That's impatience. That's lack of discipline. A trader's greatest asset isn't his brain, or his chart, or his system. It's his patience. Without patience, every other tool is worthless. You could have the best method in the world, but if you can't wait for your method's signals, you're sunk. That's the brutal truth. Think about the times you've lost money. Was it really because the market tricked you? Or was it because you didn't wait for your conditions? Most traders lose not because they don't know enough, but because they can't do nothing. They equate activity with progress. But in trading, it's the opposite. The less you do, the better you do, provided you only act when it matters. Can you believe that? That doing less makes you
were waiting for it. That was
it's
a
counter to
blunder.
everything the world teaches, but it's the truth.
I have both of those.
So I tell you again, learn to wait for setups. Train your eye. Know your signals. Sit on your hands until they show. And when they do, act with conviction. That's trading. That's how you build. And don't misunderstand me, waiting doesn't mean laziness. Waiting doesn't mean daydreaming. Waiting means preparation. It means studying your charts, watching your levels, marking your conditions, and keeping yourself ready. Because when the setup comes, you can't hesitate. You can't be asleep. You've got to be ready to strike. Do you see the balance here? Too early, you're wrong. Too late, you're wrong. Right on time, you win. And the only way you catch that moment is by preparing while you wait. The truth is, trading is less about intelligence than it is about temperament. The market humbles the smartest men, but the patient man, the disciplined man, he lasts. Why? Because he can wait for his pitch. Like a batter who doesn't swing at every ball. He waits for the one in his zone. Then he swings hard. That's how you win. Are you swinging at every pitch? Or are you waiting for your pitch? That's the question you've got to answer. I'll tell you, the market doesn't care about your opinion.
That's what I did today.
It doesn't care
I
about
was
your
swinging
eager
out the
action.
pitches.
It doesn't care about your hopes. It only cares about setups, about conditions, about probabilities. You can't bend it to your will. You can only align yourself with it. And alignment comes from waiting until it shows its hand. Now, you may think waiting is boring, but let me tell you there's nothing boring about catching a big move. There's nothing boring about watching a trade run in your favor while others are scratching their heads. That satisfaction, that profit, it comes only because you waited. Boredom is the price you pay for success. Can you endure boredom? Can you sit through quiet days without forcing action? If you can, you've got a chance in this game. If you can't, you're better off finding another line of work. I used to watch the crowd. The crowd loves excitement. They love the chatter, the tips, the action. But the crowd is usually wrong. Why? Because they're impatient. They can't sit still. They must always be doing. And that's why the crowd loses. If you want to win, you've got to learn to do the opposite. Stand apart. Be patient. Wait for your setups. Doesn't it make sense that if the majority loses, you've got to act differently than the majority? And remember, money is made in the big swings, the great campaigns. That's where wealth comes from. Not in scratching for pennies. Not in scalping noise. The big money comes from identifying a real move and riding it. But to ride it, you must first wait for it. And most can't wait. They want the thrill now. They want the profit now. And so they miss the big moves because they were too busy chasing small ones. So I ask you, do you want excitement or do you want wealth? Do you want to feel busy or do you want to be right? Because you can't have both. Trading for excitement is a losing game. Trading for setups is the winning game. And every day the market whispers tests in your ear. Here's a little move, do you want it? Here's a false breakout, will you chase it? Here's a setup that's almost ready, will you jump the gun? And every day your discipline is tested. Do you fail those tests? Or do you pass them? That's what decides your future in this business. The hardest lesson of all is that you don't need to be active to be profitable. You don't need to be clever to be successful. You need only to be patient, disciplined, and ready. The setups will come. They always do. The question is, will you be there with money in hand and mind in control when they arrive? Or will you have wasted your capital and your confidence on impatience? That's the choice every trader faces, every single day. When I say that folding weak hands preserves capital for the right opportunities, I mean it in the most practical, hard-learned way. This business is no different from a card table. The fool plays every hand because he thinks that to win he has to always be in the game. The wise man folds more than he plays because he knows the true test isn't in how many hands you enter, but in how many you avoid. Do you understand the difference? Trading is about survival first and profit second, and survival depends on your ability to protect your stake. Every dollar you put into a poor trade is a dollar you cannot use when the real trade shows up. Think about that. Isn't that the most overlooked truth in this game? You only have so much ammunition, and wasting it on weak setups is the fastest way to run yourself out of the war before the battle even starts. The market doesn't care how badly you want to be in a position. It only cares about probabilities, and probabilities don't favor the trader who insists on forcing weak hands. I've seen men trade like gamblers, throwing chips at every pot, convinced that somehow the constant action would tilt the odds in their favor. But the market isn't a casino, and you're not playing against luck. You're trading against human emotion, crowd psychology, supply and demand. And when the setup isn't there, when the pattern isn't clean, when the odds aren't aligned, you've got to fold. Can you do that? Can you watch the chart move and resist the urge to chase it? That's the hardest thing for most. Preserving capital is more than just holding on to money. It's preserving your confidence, your clarity, your discipline. Every weak trade that ends in a loss eats away at your mental reserves. It doesn't just cost you dollars, it costs you patience. It makes you desperate to win it back. And desperation is the graveyard of traders. How many times have you seen yourself throw good money after bad, just to make even? That spiral begins with one weak hand you couldn't fold. I remember times when I had cash in my pocket, and the tape looked tempting but not right. The old me would have taken the shot just to feel alive in the market. 9 times out of 10, it would cost me. The smarter me learned to step back. Better to sit in cash and look stupid than to sit in a losing position and feel trapped. Do you see the difference in power? Cash is power. A bad trade is weakness. Every time you fold, you strengthen your position. Every time you force, you weaken it. Most traders hate being on the sidelines. They think money must always be working. But in truth, cash is also a position. Sometimes the best position you can hold is none at all. When you fold the weak hands, you're holding cash, and that cash is ammunition. That's what keeps you alive long enough to take the strong setups when they appear.
Why do you move
And when
there?
those strong setups come, you'll be glad you kept your powder dry. You can't catch every move, and you shouldn't want to. The market is full of noise, full of half moves, false starts, fake breakouts. If you try to chase them all, you'll bleed yourself dry. Folding weak hands means letting go of the need to be right all the time. It means admitting that not every opportunity is yours to take. Does that bruise your ego? It should. Trading isn't about ego, it's about discipline. I'll tell you something, the biggest trades I ever made, the ones that set me ahead, they only came because I had the capital ready to seize them. And the only reason I had that capital ready was because I didn't waste it on the weak ones before. Folding weak hands isn't about missing out, it's about keeping yourself prepared. How else do you expect to build wealth in this game? You think wealth comes from chasing scraps? No, wealth comes from catching meat, and you can't catch meat if you've starved yourself on scraps. It's tempting to think that a small loss doesn't matter, that a small mistake is harmless. But add them up, one after another, and soon you've dug a hole you can't climb out of. Weak hands don't just cost money, they create habits. Every time you play a weak hand, you reinforce impatience. Every time you fold it, you reinforce discipline. Which habit do you want to build? Which habit do you think makes you richer over the years? Let's put it plainly in trading. Folding weak hands is the same as protecting your future. You don't know when the next big setup will arrive. Maybe it's tomorrow, maybe next week. But when it comes, you'll need money to act. If you've blown it on poor trades, you'll be watching opportunity pass you by. How many times have you said to yourself, if only I had the capital now, I'd take this trade? That's the punishment of weak hands. That's the cost of impatience. And don't fool yourself into thinking you'll make it back easily. The market doesn't hand out second chances. When the right setup comes, it doesn't wait for you to rebuild your account. It rewards the man who's ready, and it leaves behind the one who wasted his stake. That's the brutal truth. Can you stomach it? Think of the crowd. The crowd always wants in. The crowd can't fold. They chase, they hope, they cling, and the crowd always loses. If you want to stand apart from the crowd, you must act differently. You must fold when they play. You must sit when they run. You must wait when they rush. That's how you preserve your capital. That's how you last in this game. Every fold is a decision. Every fold says, this is not my hand. This is not my trade. That's power. That's control. The amateur thinks folding is weakness. The professional knows it's strength. Which one are you? I've sat for weeks, even months, without a trade. People said, Jesse, you're missing the action. But I wasn't missing anything. I was waiting for my hand. And when it came, I played it big. That's the difference between dabbling and trading. Dabblers nibble at weak hands and end up broke. Traders fold them, wait, and strike when the odds are right. Weak hands whisper in your ear, maybe this time. They look almost right, almost ready, but almost doesn't pay. Almost setups are how brokers get rich and traders go broke. Folding weak hands means you understand that almost is not enough. It's either right or it isn't. And if it isn't, you keep your money in your pocket. Isn't that the simplest rule, and yet the hardest to follow?
And then I got on the
Preserving capital isn't glamorous.
I got on the app
It
again.
doesn't feel exciting.
And she
Folding
messaged
a
me
weak
and said,
hand
"Oh, it's
doesn't
nice to
make your
see you
pulse
here
race.
again. Like, how's
But
everything?"
it's the habit that
Why is she
separates
there?
those who burn out
Right?
and
So
burn out.
apparently she's back on the days.
Excitement is for gamblers.
Why
Wealth is
that?
for traders.
I slid
And
in,
wealth is
I'm
built on
talking to her,
discipline, on patience, on folding the weak
and
so you can
she's
seize
she
the
told me
strong.
that she wants to hang out
The beauty of this rule is that it never
either
changes.
Saturday or Sunday.
Markets change. Technology changes.
And this girl,
Patterns shift.
had me
But the
on.
principle of
Like,
preserving
I was like,
capital
yo,
by
this is
folding
bitch.
weak hands is eternal.
This girl was
It
like,
worked
she's
in my
not
time,
funny,
and it
she's
will
smart.
work 100 years from now. Because it's not
No,
about
there's an
germs
answer
or
was
machines, it's
done.
about human nature.
No, I haven't
Human
flashed.
nature
I
is
haven't
impatient,
flashed.
greedy, fearful.
This girl.
Folding weak hands is the antidote to all of that.
So what's
It's the
up?
one edge you can
Mm.
always control. So I ask
I
you,
don't
the
think I
next
have the
time you see a
confidence to see her
chart
with
that
this
looks
bullshit.
tempting but not perfect,
It's
What
not
will
like
you
a
do?
good idea
Yeah.
protection.
will you fold?
Yeah, but
Will you
like, I
play?
don't know, nigga.
Will you
Like,
preserve
that
your
shit
capital?
gonna-
She's gonna
Will you
respect that
risk it
someone
on a
is telling
weak
her,
hand?
I want to use
That
this.
decision,
Yeah,
repeated
I
again
gotta
and
tell her.
again, is what makes
No,
or
you
breaks
know,
you in
unless
this
you're not gonna
business.
use it anymore.
When I tell you that
You're gonna use
preparation
it,
during waiting is as
you're gonna
important as
be aware
execution
that
during
wanna
trading,
not
I mean it
use
in the most literal way.
That's
People
why you gotta
think
be
waiting
careful.
is idleness, as if sitting outside
Now,
of
if
the
you're gonna
market
get to
is
the point,
wasted
oh,
time.
now we're gonna take it serious.
But
now
waiting
we're
done right
oh, you
is the
gotta know
hardest
this,
kind of
blah, blah,
work.
blah. When she's
Waiting is
really,
studying,
like,
it's
overboard.
sharpening
She's
your
really
edge,
overboard,
it's
she's gonna
conditioning
go
your
through.
mind so when the
So
moment
you
comes,
can't
you don't
limit
hesitate.
yourself because of that.
Do you think a trader just wakes
You
up,
can protect
clicks
yourself.
buy or sell, and fortune falls into his lap? No,
This bitch could have
the fortune is built in the quiet hours when he is watching, recording,
Yeah,
analyzing,
you
and
don't know the
preparing.
truth yet. You need
There
to
were
figure
days
it
in my
out.
life when I wouldn't make a single trade,
You can't just be thinking
Not
it's
one.
her.
to outsiders. It looked like I was doing nothing, but inside I was working. I was watching the
At
tape,
least you
I
know
was
that's the
marking my
most
charts,
important.
I was learning how the stock acted when it was strong and when it was weak. That's preparation. Because when the time came, when the setup lined up, I already knew the stock like an old friend. I knew how it breathed. I knew how it reacted. That allowed me to act instantly, without hesitation. Can you see why waiting must be active, not passive? Preparation is what gives you conviction. Without it, even the best setup can feel uncertain. Think about it. If you've done no work during the waiting, if you haven't watched the levels, the ranges, the volume, when the move finally comes, you'll second guess yourself. You'll hesitate, you'll doubt, you'll play small when you should play big. And hesitation costs money. But if you've been preparing all along, the moment the signal fires, you're ready to strike. Isn't that the edge you need? Many traders confuse patience with laziness. They say, I'll wait for my setup, but they do nothing while they wait. Then, when the setup appears, they're unprepared. They fumble their entries, they size wrong, they panic when the stock wiggles.
These size
That's
wrong.
not
I need to
patience, that's
size higher
neglect.
when I see my setup.
Waiting is not an
That's the
excuse
thing
to
I'm
stop
not doing.
working.
Wow.
When I
Waiting
see
is
my
the work.
perfect setup, I need to
Do you
use
understand
5
the
lots
difference?
instead of 1.
I'll give you an example.
And risk 100.
When it's
Suppose the
when
stock
all
has
your
been
confirmations
consolidating for
align.
weeks.
Yeah.
So you're
The
sitting on
amateur
your
waits
hands,
by
you're like,
ignoring it,
boom,
hoping that
everything
one day
checks.
he'll glance at the
That's
chart
when
and
you
see a
With a,
breakout.
with a
But the
10
professional
point
studies
move
it daily.
and a 5
He knows the
thing,
narrowing
I'm
range,
making a
the
band
volume
just on a
patterns,
5 point
the way
move.
the
But
buyers
think
step in
about
and support.
instead of the money, think about being
By the
right.
time the breakout
Like you
comes,
know
the
Yeah.
the
professional is
probability
ready.
is higher.
He knows the price levels that matter. He
That's
knows
what
how
I need
much
to
he's
do.
willing to risk. He
You
knows
just
the
size
exact trigger.
out when it's on
When the
when
moment
it's doing
comes,
exactly
Just
he
the
chill,
doesn't
just
hesitate.
chill.
setup.
Like you
Yeah.
see what you're
think
doing here,
profits
like, oh,
more the
I'm
man who
checking.
waited
Nah,
by
fuck that.
ignoring, or the
Just
man
chill.
who waited by
Yeah.
preparing. Execution
I'm
is
thinking
fast.
while he's talking, I'm thinking, how can I
Execution is
make
the
it better?
moment you
You know
press
what
the
I
button.
mean?
That takes seconds. But preparation takes
I
hours,
just said
days,
something very powerful.
sometimes
He
weeks.
said, when you
And
get
it's the
your
preparation that makes
confirmations,
the
you're not
execution
sizing.
possible.
So you're letting go of
Without
the
preparation,
opportunity.
execution is nothing more than guessing. How
So
many
you're waiting
times
all
have you
this time
taken
to
a
do a
trade
small ass.
just because
That's
it
what he's
looked good
saying.
Pretty
enough
scared.
without
Yeah.
having done the real work? And how many times did
Is
those
my turn?
trades turn
Yeah, what do you
into
do?
losses you couldn't explain? That's the price of
Yeah,
failing to
yeah,
prepare
yeah.
during the waiting. Markets reward greediness. They punish sloppiness. The setups appear suddenly, often when you least expect them. If you haven't been preparing, you'll miss them. Or worse, you'll recognize them too late. But if you've been doing the work, if you've been studying quietly, in the waiting you'll spot them instantly. Isn't that the difference between catching the move early and chasing it after it's already run? And let's not forget the mental side. Waiting without preparation breeds boredom. Boredom breeds impatience. Impatience breeds mistakes. But waiting with preparation keeps your mind engaged. It keeps you focused on the bigger picture. You're not staring at the screen hoping for something to happen. You're actively studying the conditions, refining your plan, rehearsing your response. That keeps you sharp. Can you see how this turns waiting from torture into training? The money in this business comes not from trading more, but from trading better. And trading better comes from preparation. Every great trader I ever knew spent far more time studying than trading. They spent their waiting hours building knowledge, building plans, building conviction. That's why when the time came, they looked fearless. It wasn't fearlessness, it was preparation. Imagine a soldier on the battlefield. He doesn't win because he shoots at everything that moves. He wins because he trained in advance, because he knows his weapon, because he studied the terrain. By the time the battle begins, half the victory is already decided by the preparation. Trading is no different. Do you really believe you can win battles in the market without putting in that kind of preparation? Preparation also protects you from surprises. The market is full of traps, false signals, head fakes. If you haven't prepared, you'll fall into them. But if you've been studying the behavior of the stock, if you've been marking your key levels, you'll know when something doesn't add up. You'll know when to step aside. That's the difference between the man who gets caught in every false breakout and the man who waits for confirmation before acting. And preparation doesn't just mean chart watching. It means preparing your mind, your risk plan, your expectations. Before you take a trade, you should already know where you'll exit if you're wrong, where you'll take profits if you're right, and how much you're willing to risk. That's not something you figure out after you enter. That's what you decide during the waiting. So when the moment comes, you don't waste time thinking you just execute. Doesn't that make sense? Most traders blow up not because they can't find setups, but because they don't prepare for them. They enter with no plan, no context, no clarity. They act impulsively, and the market punishes them. If they used their waiting time to prepare, they'd avoid half their mistakes. But they don't. They confuse being flat with being idle. They let boredom turn into recklessness. And that's why most of them fail. There's another thing about preparation: it builds patience. When you're deeply involved in studying, marking, analyzing, you're less tempted to chase noise. You're less likely to force trades. Because you know what your setup looks like. You know what conditions you're waiting for. And you can measure everything else against that standard. That makes it easier to say no to weak trades. Isn't that the key, having enough clarity to refuse the bad ones? Preparation also strengthens discipline. The more work you put into waiting, the less willing you are to waste it on poor decisions. If you've spent days preparing for a certain setup, you won't squander your focus on random trades. You'll respect your own process. But if you haven't prepared, you'll treat every wiggle as an opportunity. That's the danger of unprepared waiting. I've seen it countless times. A trader spends weeks doing nothing but staring at the screen.
Let's
not
rewind
preparing,
now.
just waiting.
Wow,
Then a
this
move
is how you
comes,
sound.
and he jumps in blindly, unready, over-leveraged, without a plan. And when the market turns against him, he panics because he didn't prepare
You're
his
willing
exit.
to replay this.
He loses.
What
And he
you
doesn't
got?
even
Are you willing
understand
to
why.
replay this?
Contrast that with the trader who used his
If
waiting
you're
time
really a
wisely.
master of your
When the move
craft,
comes, he knows exactly what to do.
you'll be
Win
able
or
to
lose,
see what's going to
he acts
happen
according
if
to
you
plan.
replay this or not.
Which one do you think survives in the long run? Execution gets all the glory, but preparation is where the real work is done. You don't see the profits piling up during waiting, but they're there, hidden in the discipline you're building, in the mistakes you're avoiding, in the clarity you're gaining. The profits show up later, when execution is fast and clean, because the
Go ahead, run it.
preparation was thorough.
Run it?
Yeah.
The market tests you every day. It tests whether you're willing to wait, whether you're willing to prepare, whether you can hold your discipline when nothing is happening.
You sure?
Most traders fail those tests because they treat waiting as wasted time.
Zero on check.
But if you treat waiting as working time,
Oh,
you pass the test.
damn. That would
And
have
passing
been
the
a killer
test is what
move
keeps you in the
right
game
How?
long enough to win.
How is that a killer move?
Wealth builds from avoiding unnecessary
You can't,
trades as
listen,
much
all
as
you're
from
doing is
winning
attacking
ones.
this and this.
That sounds
Yeah.
simple,
I can move this out of
doesn't
the way.
Yeah.
yet most traders never grasp it.
But still,
They
I
think the
would
road to
have
riches
at least
is
A
made
four?
by piling
Yeah.
on trade after
Sometimes it's
trade,
four.
stacking one win on another like bricks in a wall.
That was a bad
Wealth in this game isn't
You
built only by
do a
what
royal
you win.
shield to find
It's
that,
built just
to
as
know that
much,
that's not
maybe
even
more, by
valuable.
what you don't lose. Do you see
A
the
royal
shift in
shield is when you
perspective?
fort the
Every
queen,
trade you
this
don't take is
motherfucker,
an
and
act of
something
wealth
else.
building, provided it's
For
one of
four
those
games.
unnecessary, low-quality setups that would only bleed you dry. When I look back at the campaigns that made me money, they weren't made by endless activity. They were made by selectivity,
I was like, what the fuck?
by saying no more often than yes,
Trap?
by refusing to get caught up in the
No.
urge for action. You may not realize it yet, but restraint is the most profitable skill a trader can learn.
Okay.
How many times have you told yourself, I just need to
Well, if
trade
I
more to
can
make
do
more?
this, I can
And how many
definitely do
times
that,
has that left
right?
you with more losses
You
than
do that.
gains?
I don't know why you would do
That's
that.
the
but
trap.
you
I
do
will
that.
be a little
The
risky.
market doesn't reward you for
Right.
effort. It rewards you for precision. Unnecessary trades are like
Checkmate.
termites eating at your account.
Why is
One little
it?
nibble doesn't seem like much, but over time, the structure collapses.
Oh, yeah.
You don't notice the
Run it
damage
back.
until it's too
Nah,
late.
nah, nah.
That's what happens when you keep taking trades that don't meet your highest standard.
Alright, let's do the one that we had. You were here.
A minor drawdown there, it feels harmless. But stack them together, and suddenly you've erased the gains from your best trades. Isn't that the cruel truth? It's not that you didn't have winners, it's that you buried them under a pile of avoidable losers. There's a kind of wealth that comes from subtraction. Subtracting the poor trades, subtracting the half-baked setups, subtracting the boredom trades. By cutting them out, you leave room for the real ones. Wealth isn't just about grabbing at every opportunity, it's about filtering until only the best remain. Do you think a jeweler keeps every stone he sees? No, he sorts, discards, rejects, until only the true gems are left. That's what you must do with your trades.
Yeah, let's rewind that.
Most traders don't fail because they lack information. They fail because they cannot handle the truth. The truth is brutal, silent, and indifferent to how much you think you know. It doesn't matter what book you've read, what strategy you copied, or what indicator you've loaded. If you cannot control your actions when the market tests you, you will be eliminated like the rest. No warning, no second chances. The market does not care who you are. It only listens to price and action. And the overwhelming majority of traders fail for one reason. They violate basic principles of discipline and risk, not once or twice, but constantly. And when the final trade goes wrong, they act surprised. But the result was never uncertain. It was only a matter of time. I've seen fortunes made and lost. I've made and lost them myself. The reasons never change. The patterns repeat endlessly. Men enter the market with emotion and exit with regret. They chase noise, ignore logic, trust others, and refuse to accept what's right in front of them. The tape tells them what to do. They do the opposite. This is not a game of predictions. It's a business of execution. What you think does not matter. What you do is the only thing that counts. And if you don't understand this now, the market will teach you the hard way. Listen carefully. What you're about to hear won't comfort you. It will confront you. And if you're not ready to face the reasons most traders fail, you will become one of them. Subscribe now, like this video, and leave a comment. By doing that, you help more people see this message, and you let me know this work is not in vain. Every trader begins with excitement. They open their first position, take a small win, and suddenly feel invincible. It seems easy. Too easy. A few dollars in, a few more out. They believe they've cracked the code. That first profit is not a lesson. It's a trap. It teaches them the wrong thing. It rewards randomness and disguises it as skill.
What?
Rewind
Rewind
The
what?
dangerous moment in a trader's life is when early luck is mistaken
What?
for talent. That illusion is powerful.
Go.
It creates overconfidence.
Wait. Rewind that.
They size up too quickly, ignore
What you
structure,
got?
and assume that if it works
So
once,
play a
it will
different
work
game.
again. But the market doesn't owe them consistency. It doesn't
What the
recognize
heck?
previous success.
Either way, I got you.
It
Look
only
at this.
reacts to price and action now. I made that mistake too.
Look at this. This is
When I
even
started
worse.
winning in bucket shops, I thought I had mastered the market. But those shops were a sandbox. When I moved to real
I had
exchanges,
you
reality
beats
hit.
in here.
Execution was
I
slower,
had you beat.
spreads were
How'd you
wider,
have me beat?
and the edge I relied on
Alright,
vanished.
so what did you do? You had
My capital
You
disappeared
put me
faster
there,
than I
and I
thought.
was here.
Not because the
You had that
strategy
little
failed,
guy here.
you were
but
here.
because I didn't
No, this is
understand
here.
that markets punish arrogance
You
without
had that here.
hesitation.
You took Mike Bishop.
Yeah.
Confidence not
Boom.
backed by
I came
structure
here.
is just exposure.
How am I beat? There's nothing. You don't
That's
have
what most
anything.
traders never grasp.
I'm up in material.
They think the goal is to be
Ah,
right.
that's too late. That's too late. You lost it.
Yeah, how you beat, bro? How you beat?
That's a blunder.
How you
That's
beat,
a
bro? That's
blunder.
crazy.
How'd you fuck that up?
Yo.
Wait a minute. Wait. No, there was something else here.
Nah, how you beat the whole time?
Yo, you fucked up.
Fuck.
You
I
fucked
had
up. Run it
that
back.
shit.
Run it back.
The amateur.
Nah, we gotta finish
goes to
think
Wall
I
Street
can-
with his
I
mind
can-
consumed with
Snake,
a
I had him smoked.
I had
ultimately ruinous
for
question.
sure.
How much
So
money
I'm
can I
gonna
make?
be it.
He is a
Wait,
hunter of
And
games,
you were gonna
a
eat my
dreamer of
horse
fortunes,
after that.
and he is, by this very
Yeah, I'm like
mindset,
this now.
destined for the slaughterhouse.
You can't do that because we're running the thing.
Yeah.
He survived the unforgiving
So
onslaught
now-
of the market long enough to learn
Jeez,
his
That's
great
a
how
real
do you-
squeal.
laws. Begins
Wait
from
a
the
minute.
polar opposite.
Crazy. I miss
His
it.
first, his last.
That's been there for like 3 moves.
Not on the
That's
potential,
been
I
right
know. That's the problem. I was
present
like, I
and
had that.
reality of risk.
Jeez, what the heck?
His primary question is always, how much money can I afford to lose?
Yo, you didn't even know that was there until you're like, hold
Dividing
up.
line that separates the man who is built to endure from the man who is destined to be wiped out. The amateur is an optimist, a creature of hope. The professional is a realist,
What a
a
blunder.
strategist whose primary and most sacred duty is the relentless and disciplined preservation of his capital. For he knows a simple and profound truth. A speculator without capital is like a general without an army. He is no longer in the game. His opinions, no matter how brilliant, are worthless. His past victories are but memories. Capital is the lifeblood of speculation, the ammunition in the long war against the market's uncertainty. To understand the operational philosophy of a master like Jesse Livermore is to understand that every single rule, every tactic, and every principle he ever espoused was built upon this one single foundational bedrock, the preservation of capital above all else. This was not merely a rule, it was his religion. This entire system of risk management, forged through a lifetime of both
You have
spectacular
a checkmate.
victories and soul-crushing
Wow.
4
defeats,
moves.
is a
I'm gonna let you
science.
find it. Don't do it. Think about
It
it.
is a set of definite,
Think about
logical,
it.
and
There's a checkmate
inviolable
on
laws for engaging
four
with an
moves.
inherently
Unavoidable.
uncertain future.
On my end,
On your
It is the speculator's only
You
true
want it back?
shield against his own
Want
human
me to show you?
fallibility.
mm,
You have to sacrifice your
This
queen.
shield were documented with unparalleled clarity and insight by Edwin Lefebvre in the definitive chronicle of a
You
master
sacrifice your
speculator's
queen, you
mind.
win.
A link to his
yeah,
essential
right.
reminiscences of a stock operator, now with a unique, detailed chapter-by-chapter
Well, it
analysis.
depends on what I
of
play
Davidson
afterwards.
is
You
left in the
sacrifice the
description
queen,
below this video.
right?
This new analysis
I'm
is specially
forced.
designed to make the timeless wisdom of the book powerfully relevant to the modern reader.
Fuck.
With that, let us begin the
Wow.
clinical dissection of the 12
What
great
I can
principles of
do
risk
is-
management that form the core of the Livermore method.
Boom. Boom.
First, preserve capital above all else.
I say what I can
This
do
is the
is-
prime directive, the great law from which all other laws are derived. It is the alpha and the omega of the speculator's creed. The first goal is not to grow rich, but to survive. The first victory is not a great profit, but the simple act of being able to come back and play the game the next day. The speculator's capital is his inventory,
There's a tough
just as a storekeeper has shelves of goods. He would
I
not
would
allow a
say-
thief to walk in and steal his inventory. Why then would he allow the market, through his own carelessness or emotionalism, to steal his precious capital?
criminal.
The man who does not make capital preservation his highest priority is not a speculator. He is a gambler,
Tough
a thrill seeker on a short and certain
You
path
gotta
to
resign,
financial
buddy.
oblivion.
You're
He
not
treats
coming
the
out
market
now.
like a casino going for broke on a single hopeful bet. The professional treats speculation as a serious
Let's see if
business.
you're that smart.
And the first rule of any business is to stay in business.
Well,
This
I'm
means
good.
protecting one's working capital with the ferocity of a mother protecting her young. Every decision, every trade, every thought must first pass through this one simple filter.
I need
Does
to
this
move
action
away.
increase or decrease the risk to my primary capital
If I
base?
move away, you have my
If the risk is too great,
corner.
if the conditions are unclear, if the odds are
Which
not
you really
heavily in his
don't,
favor,
so I am moving.
the
on.
professional simply does nothing.
Let's go. You're done.
He understands that the market will always be there tomorrow, teeming with new opportunities. His job is to ensure that he is still there to take advantage of them. This requires a defensive mindset, a profound respect for the market's power to inflict ruin. The amateur is always on the offense, always trying to score. The professional spends 90% of his time on defense, on studying the field, on managing his risk, so that when he finally does choose to go on the offense, his attack is decisive, powerful, and made from a position of
I'm about to
unshakable
get that
strength.
crap.
Strategy.
You're
It is the
done, my
ultimate
man.
expression of
speculative courage.
You took my
It is the
advice
courage
in a
to be
different way.
patient, the courage to do nothing, and the courage to admit when one is wrong. It is the foundation of a long and prosperous career. Second, cut losses quickly. This is the primary practical application of the Prime Directive. If the first rule is to preserve capital, then the first action must be the swift and merciless cutting of a loss. A loss is a cancer upon a speculator's account, and the only sane response to a cancer is to cut it out before it can spread. The tape is the final arbiter of truth. A loss is not an opinion. It is a fact. It is the market's own clear, cold, and impersonal verdict that the speculator's initial judgment was wrong. The professional speculator does not argue with the verdict of the tape. He obeys it instantly and without question. The amateur, by contrast, is an expert at arguing with the tape. When a trade goes against him, he does not see it as a signal to exit, but as an invitation to hope.
All defined.
He tells himself it is a temporary reaction, a shakeout of the weak hands. He is a man whispering comforting lies to himself as his house burns down around him.
What are you trying to accomplish?
A small loss, when taken quickly, is a minor and
So what we're gonna do is, hey.
Make sure you're paying attention to the
Oh, yo, that's burning.
Oh shoot.
Oh my God. It's done.
Seriously?
Jessica, buy food.
Yeah, for right.
Real talk.
Nah, it's so good. It's so good.
Imagine he would have never told you. I told you when I left.
Yeah.
Oh, shit.
Put the fire now.
I was like, yo, what's that smell? Nigga, we don't cook. Oh my God.
That's true. You guys are talking shit. You guys are talking here.
You only left one on, right?
The rice.
Nah, it's still good. They just ran out of water.
What was the rice?
That's our beans.
No
Y
beans.
quemó la carne, lo que dura más que mi tiempo.
No beans.
Nah, no beans. But it's not that bad.
The meat is good. The meat's
Yeah.
still on, she says.
Nah, I turned it off.
The beans are good.
Yeah.
I mean, yeah, I'm just gonna go get Marcus too. It's my traffic here.
Sorry.
Sorry.
significant event. It is a normal business expense, a small insurance premium paid to the market for the privilege of testing a speculative idea. It is a flesh wound that heals overnight, but a small loss, when it is not cut, is allowed to fester. It grows, day by day, into a large, debilitating, and ultimately catastrophic loss. It becomes a heavy chain, shackling the speculator to his past mistake and clouding his judgment for all future decisions. The speculator must learn to take a small loss with a sense of professional pride. It is not an admission of failure as a man. It is a demonstration of his success as a disciplined operator. It is the proof that he is following his rules. The human ego is the great enemy of the stop-loss. The ego hates to be wrong. The act of selling for a loss is a concrete admission of error, a painful blow to one's pride. The amateur would rather risk a great deal of his money than a small bruise to his ego. The professional has learned through painful experience that his ego is a luxury he cannot afford. He has subordinated his pride to the simple, profitable mathematics of risk management. He knows that his job is not to be right all the time, but to make a great deal of money when he is right. And this is only possible if he loses very little when he is wrong. Third, never average down a losing position. This is the speculator's mortal sin. It is the most perverse, the most illogical, and the most destructive of all trading mistakes. It is the act of not only failing to cut a loss, but of actively and deliberately reinforcing a proven failure. The amateur, trapped in a losing position by his ego and his hope, sees the declining price not as a warning, but as an opportunity. He tells himself, the stock was a bargain at 50, so it must be an even better bargain at 40. He buys more, averaging down his cost. He believes he's being a shrewd investor. In reality, he is a fool. doubling down on an error in judgment. He's throwing good money after bad, sending his precious reserves into a battle that is already being lost. The professional operates on the exact polar opposite principle. He never reinforces failure. He reinforces. He never averages down a loss. He pyramids a profit. To average a loss is to commit more capital to a position that the market itself has already told you is wrong. It is a direct and defiant argument with the ticker tape. It is an act of supreme and costly arrogance. The stock is not cheaper at 40. It is weaker. It has, by its own action, proven that the line of least resistance is downwards. To buy more of it is to attempt to catch a falling knife. This mistake is born of the desperate desire to get out even. The trader, lowering his average,
I didn't see that.
to rally back to his break-even point.
You want white again?
Realize he is only digging his financial grave
What
deeper.
the fuck happened here?
The ironclad rule must be this. Never under any circumstances buy more of a stock that is showing you a loss. A losing position should only ever be closed. It should never be increased. To do otherwise is to violate the most fundamental principle of capital
Twice I
preservation.
did a blunder.
It is the act of a man who, finding himself in a hole, decides that the only solution is to keep digging.
Not gonna lie, but the game ain't over until it's over.
This is the great positive corollary to the
You were
defensive
losing
rule
and I
of
made a
cutting
blunder and
losses.
gave it back the lead
The
and you just
speculator
made
who has
another blunder
mastered the
and I'm
art of
seeing
cutting
it.
his losses has solved the problem of survival. But to move from mere survival to great fortune, he must master the second and equally difficult art. The art of letting his winners run. The same emotional demons that cause the amateur to hold his losers cause him to sell his winners too soon. He enters a trade correctly, and it shows him a quick and handsome profit. Immediately, he is seized by the emotion of fear. The fear of seeing that paper profit disappear. He is tormented by the thought of a normal reaction wiping out his gain. He tells himself the most dangerous and seductive of all market platitudes. You can't go broke taking a profit. And so he sells, snatching his small, nervous gain. While it is true that one cannot go broke taking a profit, it is the philosophy that guarantees a man will never grow rich. His career becomes a series of small, timid wins that are inevitably and mathematically wiped out by the one or two large, undisciplined losses that he was too hopeful to cut. Livermore stated with absolute clarity that it was never his thinking that made the big money for him. It was his sitting. It was the courage and the character to hold a winning position day after day, week after week, as long as the stock and the market were acting right. The great profits are not made in the initial breakout. They are made in the great, quiet, and often nerve-wracking middle of the big swing. To sell a stock that is in a powerful, confirmed uptrend is to abandon a victorious campaign long before the final victory has been achieved. The speculator must have the patience to sit with the winner, to endure the normal, healthy pullbacks, and to give the trend the time it needs to fully mature. This is the hardest work in speculation. It is a battle against the powerful, primal instinct to secure a small gain out of fear. The man who has mastered this art is the man who can turn a 10-point gain into a 100-point gain. He is the one who captures the great life-altering moves that the market offers only a few times a year. He is a farmer who has the patience to let his crop grow to its full and magnificent harvest. Fifth, never overtrade. This is a rule against the gambler's itch for constant action. The amateur feels that to be out of the market is to be missing an opportunity. He cannot stand the quiet of being in cash. He feels a compulsive need to always have a position on, to always be in the game. This is a fatal psychological flaw, and it leads to the destructive habit of overtrading. He begins to trade on the minor, meaningless fluctuations of the market. He is not speculating on the great primary trends. He is gambling on the random day-to-day noise. The costs of this habit are twofold. The first is financial. He is constantly being whipsawed, buying at the top of a small wiggle and selling at the bottom. His account is steadily bled dry by 1,000 small losses and the constant corrosive drip of commissions. The second cost is mental. The man who is always in the market is a man whose mind is never clear. He is in a constant state of emotional turmoil, his judgment clouded by the stress and the anxiety of his last losing trade. He loses his perspective. Livermore knew that the most profitable position in the market is often no position at all. There are long periods when the market has no clear, definite trend. To trade during these times of confusion is to be a fool. The professional speculator conserves not only his financial capital, but also his precious mental and emotional capital. He knows that his judgment is his greatest asset, and he refuses to squander it on low-probability marginal trades. He has the discipline to wait patiently for the perfect setup, for the moment when all the factors align and the market itself gives a clear and unmistakable signal. He knows that such moments are rare. He is paid not for his action, but for his correct judgment. And a massive part of that correct judgment is knowing when to do nothing at all. To avoid overtrading is to avoid the market's most common and costly traps. Sixth, risk only a small fraction of capital per trade. This is the final mathematical bedrock of the entire risk management system. It is the rule that ties all the others together. It is the science of position sizing. The amateur, when he feels a surge of conviction about a particular trade, is often tempted to bet the farm. He will risk a large and reckless portion of his total capital, 10, 20, even 50% on a single idea. He is acting like a man who is playing Russian roulette with his own career. Even if his judgment is correct 9 times out of 10, the one time he is wrong will be enough to wipe him out completely and permanently. The professional speculator, no matter how confident he is in a particular trade, will never, under any circumstances, risk a large fraction of his total capital on a single venture. His position sizing is a matter of cold, hard, and conservative arithmetic. The 10% stop-loss rule is the first layer of this, but the true formula goes deeper. The potential loss from that 10% stop-loss must, in itself, represent only a very small and almost insignificant fraction of the speculator's total capital base. A sound rule is to never risk more than 1 or 2% of one's total fortune on a single speculative idea. This is the mathematical guarantee of survival. A speculator who follows this rule can be wrong 10 times in a row and still only have lost 10 or 20% of his capital. He is still in the game. He is still a factor. The amateur who was wrong just once on his big, reckless bet is out of the business forever. This rule is the source of true speculative courage. A man who knows that the maximum possible loss from any single trade is a small and manageable amount is a man who can trade without fear. His mind is free from the paralyzing anxiety that comes from having too much on the line. He can make clear, objective decisions based on the evidence of the tape, not on a desperate need to protect himself from a ruinous loss. It is in these moments of calculating risk and managing exposure that the true work of a speculator is done. The emotional desire to bet big is a powerful enemy. It is for this reason that a constant return to these first principles is essential. A return to this channel, to this video and others, especially after a series of painful losses has clouded one's judgment, serves as a vital recalibration of the professional mindset. The science of position sizing is the final and most important element of a sound defensive strategy. The man who masters it has made it mathematically impossible for the market to ever deliver a fatal blow. He has guaranteed his own survival, which is the first and most important victory in the great game. 7. Wait for clear market signals. The great game of speculation is not a game of action, but a game of reaction. The amateur, driven by his impatience and his greed, is always trying to make something happen. He seeks to impose his will upon the market. The professional knows this is a fool's errand. He waits, with the calm vigilance of a master, for the market itself to give the signal. A speculator is not paid to be a fortune teller. He is not paid to anticipate, to guess, or to hope what a stock will do. He is paid to correctly diagnose the present fact of the market's action and to act upon it with intelligence and dispatch. To act before the market has spoken is to be a gambler, betting on a blind turn of a card. The clear market signal, the one that justifies the risk of one's capital, is the breakout at a pivotal point. This is the moment when a stock, after a period of consolidation, decisively announces its intention to begin a new and powerful move. This is the moment when the line of least resistance becomes clear and unmistakable. This signal must have a definite character. It must be a move of authority, a breakout with power and force, and it must, without exception, be accompanied by a dramatic and significant increase in the volume of trading. This is the market's own confirmation that the move is genuine and is being sponsored by the smart money. To buy before this pivotal point is to act on hope. To buy after this pivotal point has been confirmed by the tape is to act on evidence. The entire science of speculation can be reduced to this simple distinction. The professional waits for the evidence. He may have to wait for days, for weeks, or even for months. It does not matter. He has the discipline to sit with his capital and his peace of mind intact until the one single high probability moment presents itself. The market is not a continuous performance. It is a series of rare and valuable opportunities. The speculator's job is to be ready for them. To act without a clear signal from the tape is to be a sucker, providing your capital for the benefit of those who are patient enough to wait for the proper time. 8th, cash is a position. The amateur speculator believes that to be in the market is to be a speculator, and to be out of the market is to be a failure. He feels a constant nervous itch to be invested, to have a position on. To be in cash to him feels like an admission of defeat, a missed opportunity. This is a profound and costly psychological error. The master speculator understands a truth that is invisible to the novice. The cash position is often the most strategic, the most powerful, and the most profitable position of all. To be in cash is not to be out of the game. It is to be a king in reserve, waiting for the decisive moment to enter the battle. The man who is in cash possesses an asset of incalculable value, a clear and objective mind. He is not emotionally entangled in any particular stock. He is not being whipsawed by the market's minor fluctuations. He is not suffering from the mental exhaustion that comes from a series of small, frustrating losses. He can sit and observe the market with the cool detachment of a scientist. He can see the great primary trends forming without the distorting lens of his own hopes and fears. His judgment is sound. His mind is at peace. The man who is
Sounds like
always
a
in the
fair
market
trade
by
to me.
contrast loses his perspective. His judgment becomes clouded by his last trade. He is either overconfident from a small win or fearful from a small loss. He cannot see the forest for the trees. There are long periods in the market when the conditions are not clear, when the tape is telling a story of confusion and indecision. These are the treacherous sideways markets. The professional speculator knows that to trade in such a market is to engage in a low probability gamble. His response is simple. He does nothing.